This webinar was recorded for subrecipients of the Tennessee Strong Families Grant on November 5th, 2025. The webinar focused on explaining credit and credit reports, helping clients resolve credit issues, and understanding the pitfalls of payday lending and credit restoration companies. The slides and reference materials are posted on our webpage for your reference and review.
Hello, everybody. Thank you for joining us. I'm excited to be with you again to be talking about all things credit and credit related. Just a little bit of housekeeping. If you do have questions, please feel free to drop those in the chat as I go. Don't feel like you have to save those for the end, or you're welcome to unmute and ask your question out loud. So feel free to interrupt me. It will not offend me at all. All right, you all, today we are going to be talking about credit and borrowing. And before we jump in with an activity, I really want to start off by getting us on the same page as to what I mean when I say credit. So really, credit is nothing more than borrowing money in exchange for the promise to pay it back, usually with interest. So, if I decided, oh, I could really use a Coke from the Coke machine, actually, I'd probably say I could really use a Sprite from the Coke machine. And I told Brooke, hey, I don't have any cash. Can you give me $2? That would actually be a form of credit. She's lending that $2 to me with the expectation that I'm going to pay it back. Hopefully, she wouldn't charge me interest, but she would certainly have that option too. So we're really going to be talking about credit today in really big terms. We're going to be talking a lot more than just credit cards. Now, you all, there is nothing like forced fun to get us started in a presentation. So I am going to read off a couple of statements, and I want you to tell me if you think they are a good use of credit or not. And so you can do that by just doing a thumbs up, thumbs down, yes, no, whatever reaction you want to use for the statements that I'm going to read to you. And Brooke and Chase will help me monitor and we'll see how we're doing. So first statement: is taking out $5,000 in student loans for college tuition a good or bad use of credit? Thumbs up, thumbs down. How about charging dinner and a movie ticket to go out with friends? Good use of credit, bad use of credit. And we're assuming you're not going to pay this off at the end of the month. Think about this one. How about charging car repairs to get your car running again, and this is your only mode of reliable transportation? Okay. How about getting a loan to pay your credit card bill? Good or bad? And how about using the store's financing program to buy a laptop or a washer or a dishwasher or something like that? Good or bad use of credit? All right. So what I hope that you realized is, wow, these statements, it really depends. There's just a lot of ambiguity here. And really, credit is very personal. And some of the things that I talk about today will be just things that I'm talking about in general. But you'll have to figure out how they apply to you and how do they apply to your specific context. So yeah, it's situational as to whether something is good or whether something is bad. For example, paying off, going to Lowe's, let's say, and buying that washer on 15 months, same as cash, no interest, is great if you pay it off within that 15 months. We know if you're even a day over, what happens is you're going to pay every bit of interest that's accumulated during those 15 months. So it really is situational and it really depends on you and are you able to manage the credit that you have. When we talk about credit, there are various types of credit. Two of the biggies that we hear a lot about are revolving credit. This would be like your credit card where you can make multiple purchases up to a certain limit and you repay what is owed each month, or hopefully you repay what is owed each month. That is revolving credit. I think of like a revolving door. Installment credit, though, is like your car loan or your mortgage. This is where you borrow a specific amount of money and you agree to pay it off in a specific amount of time. Could be a 5-year car loan I'm even hearing that we're doing 7-year car loans. And with this, you make these regular payments. So you pay this loan off at the end of a set date. These are really the two big forms of credit that we talk about a lot. But there are other forms of credit as well. We know that there are cash loans where we borrow a specific amount of cash and agree to repay it at a later date, often with interest fees that are ungodly, folks. And then also, there's another form of credit, and we call this a non traditional form of credit. And this is service credit. So, for example, if I have my cell phone and I'm paying Verizon on time, every month, that is a form of credit that I am building up because I am showing that I have the character to pay that or to pay that bill every month. Same thing with KUB here in Knoxville. That's our utilities board. If I pay my KUB bill on time every time, don't get the lights shut off, that is a form of non traditional credit. The reason I talk about this non traditional credit or service credit is this is a type of credit that many folks who don't have traditional credit have to use when they're applying for a loan or when they're applying for perhaps a car loan or a mortgage. This non traditional credit is considered valid. Banks and financial institutions use it all the time. So it does help for participants to realize that what they've been doing on a regular basis, that is a form of credit, and that can help them when they're going to take out credit in the future. When we talk about credit, there's really some just basic language that we cover. One of the two things that I want to talk about are at the bottom of the slide. First, we have the principal. This is the amount of money that you have borrowed. So, for example, with a car, I think I read where the average car prices are now around $50,000. I cannot believe that. But if you borrow $50,000 over 5 years, your principal is what you borrowed. It's that $50,000. The interest, that's what the lender charges you for giving you that opportunity to use that $50,000 now. Perhaps the interest is 3, 4, 5% on a car loan. That is what you are paying in order to have this money right now when you need it to get that car. So those are the two big things that we talk about. What we do need to realize, though, is that interest adds up. So, for example, if we had, let's take Jesse here, and he has a flat tire on his car, and this is his reliable transportation, his only way to get to work, and he doesn't have the money to buy a new tire for that car. He is able, however, to purchase the $150 tire at 22% interest for 90 days. So he's got 3 months basically to pay this off. We know that he is going to be paying a lot more than $150 for that flat tire. And so in our example here, you can see that actually he's going to pay $8.25 more for that $150 tire because that $150 tire at 22% interest for 3 months comes out to $8.25. Not terrible, but boy, that certainly adds up when you look at how much it would cost if that was financed for a year, 2 years, 3 years. So credit costs us money. And that's what we really have to understand is that there's always a cost to that credit. Now, when we talk about credit, one of the things that I'll point out is you hear interest rates typically expressed as APR or annual percentage rate. And this is really what you need to know if you really want to know the cost of using credit. The APR is just a consistent way that we can report interest because this includes not only the interest rate, but it includes any other fees that the financial institution or the lender have thrown in there. So when you're really looking to compare, hey, is this a good deal for using this credit or getting this particular loan? You always want to ask for the APR. What is the annual percentage rate? And that's the comparison that you want to make. I will point out that with credit, there is a grace period. there's always that time before interest starts accumulating on a purchase. So, for example, if you're using revolving credit like a credit card, it's always a good idea and it's very good practice to pay that credit card off at the end of the month because consumer debt can burden families. And consumer debt really has become a huge burden for a lot of our families in Tennessee in particular. Now, when we talk about credit, we also talk about these five C's of credit: capital, capacity, character, collateral, and conditions. Anytime that I am going to get credit, these are the five things that a lender will think about when they're getting ready to decide, are we going to give Chris this loan or not? First of all, they're going to look at capital. What kind of money do I have coming into the household? They're also going to look at capacity. How stretched am I when it comes to credit? Do I have three credit cards, a car loan, a mortgage, a student loan? Do I have all of these different kinds of loans out there? How stretched am I? How thin am I stretched when it comes to loans and credit? They're also going to look at, and this is a biggie, the character. How well have I paid off my bills in the past? This is probably the number one thing that lenders look at when they're trying to evaluate someone to see if they're a good credit risk. They also look at collateral. So, for example, in my car example, if I don't pay, guess what? They come and get the car. I have a mortgage with UT Credit Union. If I don't pay, guess what? They come and kick me out and take the house. So, is there a collateral there? I will say that's part of the reason when you look at credit cards that the interest rates are so high. I mean, 20 something percent. It's craziness. They're so high because there is no collateral there. Chase or Bank of America or whoever cannot go and get the dinner that you charged last week from you. They cannot go and get an outfit that you charged from you. There's no way for them to get their money back. So because they have such a high risk, that's why they charge that terrible interest rate. And then also, lenders look at conditions. What is happening in the general economy, and how is that going to play a role? So, believe it or not, they look at things like what's happening with the stock market. They look at what's happening with the labor market. They look at unemployment data and decide, is this a good time to be lending money? All of these five things go into the mix whenever someone decides if they're going to extend credit to you or not. Now, on a credit application, there are just some basic data that people will be asking for before they make a decision. And you can see that right here as well. I'm sure many of you have filled out a credit application before. You're familiar with this data. So we use this data in conjunction with those five things on the previous slide to really start to paint a picture of, is this person a good credit list? Good credit risk, excuse me. Now, I'm getting ready to switch gears. So, any questions so far, or comments, or anything? All right. I'm doing my teacher thing, where you count to three and you wait for somebody. Okay, I think we are good. So, we're going to go on. Okay, let's talk about credit reports and credit agencies. In the United States, there are three big credit reporting agencies. These folks know everything there is to know about you and me, right? Nothing is secret from these three people. Equifax, TransUnion, and Experian are the three big credit reporting agencies in the United States. Their job is to monitor your credit use and to create a credit file for every living human being, whether you have credit or not. Now, TransUnion typically is more of a West Coast company. Equifax and Experian, they operate more in this part of the town or this part of the United States. Not all three of these have the same data on you. It really depends on how your lender is reporting that data. So I say that because when you pull credit reports, sometimes you'll find out that, hey, these all don't match up. My car loan is only showing up, let's say, on Equifax and not showing up on TransUnion. And we see that happen all the time with these three. How many of you, by thumbs up, thumbs down, how many of you have ever seen your credit report before or ever pulled your credit report? Got a thumbs up, got a thumbs up, thumbs up. All right. All right. You all could be teaching the class then. So if you've ever pulled your credit report, you know there's some basic information on there. Actually, it's scary, the amount of information that is on there. There's your personal information. There's your payment information. Have you been 30, 60, 90 days late on payment? There's any judgments against you are listed there. And then anytime anyone has made an inquiry or pulled your credit report, it's going to be listed on there as well. Experian, Equifax, and TransUnion all have a website and they all have apps that you can download and put on your phone. And so on my phone, I have the Experian, Equifax, and TransUnion apps that I have here, and I'll explain why in just a second. Now, this personal information that's on your credit report, public records are going to last 7 years. Those will be on your credit report 7 years. Anytime you have account information, like I have perhaps a car loan, or maybe I have a credit card or a mortgage, that account information will stay on there for 7 years. The inquiries or who has been pulling my credit report stays on there for 2 years, and then bankruptcies stay there 7 to 10 years. One thing I want to point out is this is not an exact science. So it's not like, oh, okay, I've reached that decade, I've reached 10 years, this bankruptcy is coming off. Sometimes it takes a while for that to happen. So it's not just going to happen on a particular day, that, hey, I've reached the 10-year mark. But as a general rule of thumb, this is how long these things are going to stay on your credit report. Now, I will say, let me back up just a second. Credit reporting agencies do not get it right all the time. In fact, it is very common for you to find errors on your credit report. And we're going to talk about what to do with those errors and how to get copies of your credit report in just a second. But your credit report is used to put together your credit score. So these are two different animals, if you will. Your credit report is something that you have access to. You can get a copy from every credit reporting agency free of charge once a year. Your credit score, however, is something that you typically have to pay for. Now, the credit score is where I take your credit report and I use this fancy statistical modeling formula and I give you a grade. I give you a grade that basically says, how risky is this person when it comes to lending money? So I'm basically comparing everyone in the United States and saying, where do they fit? What is the risk when it comes to lending them money? The problem with credit scoring, and there's a lot of problems with credit scoring, and the problem is, especially for folks who maybe have had some challenges with credit in the past, is a credit score assumes that the way you behave in the future is how you behaved in the past. So, hey, maybe you made stupid mistakes when you were in college. God knows I made plenty of them. Maybe I made those stupid mistakes. My credit score is going to say, hey, he's made these stupid mistakes. He's going to keep making stupid mistakes into the future. So I really do have there's somewhat of a problem that I have with this credit score, and it really hurts folks who are trying to make a change in their financial lives. No one will tell you how a credit score is computed, right? But what they will tell you is what makes up your credit score. And looking at this chart, you can see that big green wedge. And we know that simply how you pay your bills, do you pay your bills on time every time? That really has the greatest impact on your credit score. It accounts for about 35%. The types and amount of current debt you have almost counts for a third of your credit score. They look at the length of credit history. Somebody who's had a mortgage and been paying on it for 20 years looks a lot better than somebody who has a mortgage and only been paying on it for 2 years. They look at, are you taking on new credit? And then finally, they look at the types of credit that you have. Do you have a healthy mix of credit, or do you just have 20 credit cards that you're running the balance up on? All of these are used to give you that credit score. Now, that credit score is different between the credit reporting agencies. They all use a different scoring system. They all have their own statistical model, and there are hundreds of these credit scores out there today. So I have put the most common ones here in this chart. What I want to point out is it's not enough to know your credit score. You've got to know where that score is coming from. So, are you using a FICO score? If so, then the range is 300 to 850. 850 is amazing, 300, you're going to have a really hard time getting money from anybody. Experian has a little bit different range that they use. Equifax, different still. And then TransUnion has a different range as well. And then there's this Vantage score, which is basically a combination of all these credit scores, and that has a different range than the others. So you really have got to first get the credit score. Second, find out what kind of credit score it is so you know the range that you can compare yourself to. So, how do you compare? Go ahead, Brooke.
I was going to say we have a quick question in the chat.
Yeah, go for it.
Asia says, please explain why someone's credit score may drop after paying off a credit card or a loan. It seems counterintuitive. Shouldn't eliminating debt improve your score? I've had this.
Oh, yes, yes, that is true. All right, y'all. I told you the credit score is not perfect, right? And actually, it's kind of stupid in a way because you're right. When you close that debt, when you pay it off, you no longer have that history there to show that you've been paying on time every time. And that's why you take that ding. Does that make sense? You've done a great thing. You've paid off the debt, but you don't have that history. And remember, history makes up part of that credit score, and that's why you take the ding. Now, I would much rather have someone pay a debt off and take a little ding to their credit score than I would have someone continuously have this debt hanging over them and they're racking up interest. So hopefully that answers your question, Asia. If not, you can follow up in the chat or unmute. So how do we do? How are we doing with credit scores? In the US, the average score, the average FICO score is about 715. The average FICO score in Tennessee is 706. And in Knoxville, the average score is 631. So it's very interesting that Knoxville is less than the average of Tennessee overall. I figured Knoxville would be a little bit higher than that, given that we have a lot of good paying jobs in this area.
Do you have any other data on the other metropolitan areas? I'm just curious.
I do not. I do not. I should have pulled those other metro areas, but I didn't. But it is readily available on the FICO website. They have, I think, even a map of the United States where you can really start to drill down and get some of this average data. So I just throw that in there so you can see how you compare. Now, if you don't want to pay for your credit score, but you're like, I'm dying to know what it is, like I have to know, you can actually go to this website and there is a little program there where you can estimate your FICO score. And it comes pretty close to what the actual score is. So if you're just dying to be like, all right, I just got to know this, but I don't want to pay for it, use this My FICO credit score estimator. It's kind of fun to play around with too, to change it up and see, hey, what happens whenever I make some changes to the way that I answer these questions. So this is your credit score estimator here at My FICO. All right, here's the question. You are entitled to one free credit report per year per credit reporting agency. Where can you get it? You can get your free credit report at this website. This is the federal government's website. This legislation was actually passed during the Bush presidency. It is good legislation. They did a poor job of communicating it to the general public because still people are not aware. If you go to this site, you're going to be able to go in and get your credit report from each of the three credit reporting agencies, and you're not going to be hassled. Now, I can go to Experian, Equifax, and TransUnion directly and get a free copy of my credit report, but they will try to sell you everything under the sun before you get that free credit report. It is annoying the number of questions you have to ask. Do you want credit protection? Do you want this? Do you want that? This site is the one that the federal government runs for consumers where you can get that credit report. One thing that I would say is I would not pull all three of my credit reports at the same time. Instead, what I would do is maybe in March, I pull from Equifax. And then I wait April, May, June, maybe in July, I pull from Experian. And then maybe in August, September, October, maybe November, I pull from TransUnion. And then I repeat that cycle again the next year. Because what you do there is you actually are able to have a picture of your credit all throughout the year, free of charge. So you can see what's going on and if there are any red flags that pop up during the year with your credit report. I'm a huge advocate for pulling these credit reports because the information on them is sometimes so wrong. I've had it happen to myself. I'm Christopher Thomas Sneed. My dad is Thomas Stephen Sneed. Evidently, it's easy to get those names mixed up. At least Equifax thought it was. And so, I've had stuff that was my dad's on there and it just took a phone call to straighten it out. But it's really worth pulling that credit report. Now, one thing that I've done, I don't want credit. I don't want any more credit, right? This mortgage that I have is enough for me. I'm quite content with this mortgage and do not even want the mortgage, but I'm glad I have it. So I have actually frozen my credit. And when you go to Experian, Equifax, and TransUnion, you have the option to freeze your credit. What that means is if I go in and see Chase and I'm like, hey, I want to buy this car, I need to do a 5-year financing on it, and he goes to pull my credit report, guess what? He can't. Nobody can take out credit in my name right now because everything is frozen. It is super easy to unfreeze it. That's why I have those three apps on my phone. If I'm going in, and this actually happened to me, by the way, I was looking at the options for a car and wanted to see what it would look like if I financed it. And stupid me forgot that my credit report was frozen. So, they pull it or they try to pull it and they come back and they're like, Mr. Sneed, there's something wrong with your credit report. All I had to do was just go into the app, click a button, put in my password, and they unfroze them for me. I have chosen to do this because it is a great way to protect yourself from fraud. And oh my gosh, credit fraud is huge in the United States. When my grandmother was alive, this was a perfect option for her, right? She was at the time 80 something years old. She certainly did not need credit. She didn't drive. She had a house. She didn't need to be taking out a credit card or anything. So freezing her credit meant that nobody could try to get her credit and impersonate her identity. So I highly recommend credit freezes. I've had great success with it personally. Now, I do want to show this really quickly. This shows what happens if you have a credit score of 680, a FICO score, or a FICO score of 780. This is an estimate of how much you're dinged for these different things. So let's say that you max out a credit card. You're looking at losing 10 to 30 points if you have a 680 FICO score, 25 to 45 if you have a 780. If you're 30 days late, and this, folks, is the kicker, 30, 60, 90 days, you can drop 60 to 80 points if you have a credit score of 680. You could be down over 100 points if you have a 780. Look at foreclosure and bankruptcy. These really knock your credit score down. So these are just some examples that I put on there to kind of show you what can happen in various situations. Again, based on what your FICO score is, and these are just rough estimates of how much you might be dinged for these different things. The
Isn't
reason,
there a percentage? Sorry, I didn't mean to cut you off,
go for
Dr.
it. No,
Burns.
go,
Isn't
please.
there a percentage for credit cards that they say keep under a certain percentage and it doesn't affect your credit score of usage?
I have not heard that there
Okay.
is. Um, it does go back to that idea, and this is kind of goes back to Asia's question. You're paying off your credit card on time every time. That's good, but it does hurt, quote unquote, very little bit your credit because you don't have anything open showing that you're making those payments on time every time, showing that you are a good steward of credit. And so that goes back, to my comment that it's just stupid. But I'd rather take the ding than take the 20 something percent. And I even had it was somebody at a bank that said, hey, you probably should just keep a balance on one of these credit cards. And I'm like, no, I don't think I should. I'll just take the ding on this instead of paying the 22%. So, a question that I get all the time is how do I improve my credit? And guess what? This person is not going to help you. But drive down any road in the low income parts of town, North Knox, East Knox, over where I live here in Knoxville, and same thing in your cities as well. You're going to see tons of signs about credit repair. And the way credit repair works is really pretty simple. I mean, I guess if I didn't have morals, I would be in that business. But if Chase comes into me and he says, "All right, Chris, I need you to fix this credit. I'm trying to get a car loan. What can you do for me?" All I do as the credit repair person is charge him 200 and something dollars and then basically go to every credit reporting agency and dispute everything on that credit report. By law, when something is under dispute, it has to come off your credit report. So I've cleaned up his credit report, right? I mean, the problem is they're going to find out, yeah, these charges are legit and it's going to go right back on. But hey, I'm going to be long gone by then. I've taken the $300 and I'm gone. I've moved on to the next customer. So there are no quick fixes when it comes to improving credit. And sadly, it's a marathon. It is not a sprint when it comes to getting finances back in order. So what I can say is that, let me get to my slide over here. Sorry. The one thing that you can do is pay your bills on time every time. Late payments have the biggest impact on your credit. You've got to get your bills current and have them stay current. If you or if one of the people that you serve cannot pay their bills, they have to reach out to their creditors. For some reason, people think that if I just don't talk to them, they're not going to find me. Your creditors, I promise you, will find you. The creditors that really want to find you are the Visas, the Chases, the Bank of America, because remember, they have nothing they can take from you. They don't have the house, they don't have the car. You better bet they want their money. They want you to pay, and they'll be the ones banging the loudest at your door. We've worked with folks who've been in some really bad financial situations, and they'll tell us, yeah, I usually pay the credit cards first because they're the ones that bug me over and over and over again. And they probably really should be the ones that you pay last because remember, they're not coming to get you. They'll just bug you to death. But you want to make sure you're paying that mortgage and paying those sorts of things. So pay your bills on time every time. Number one way to improve your credit score because 35% of your credit score is based on your payment history. Again, we talked about this all right already. Keep those balances low. I would go a step further. I'd say pay them off. I'd much rather have you in a better financial situation than owing money to Chase and all of them. So, with that said, I am going to stop sharing and I am going to see if there are any general questions or comments about credit or anything that I need to touch on that I've missed. Now's your chance.
We have one in the chat here
Oh,
that says,
Sierra.
how do
Oh,
medicine and dental bills affect credit?
Sierra, you're calling me out. This is the one thing I forgot to look up before today. Okay, so here's the problem. We had really good legislation during the Biden years that took medical debt off of credit reports. What I heard last was that it was coming back on credit reports, that they wanted to roll back that legislation. Like everything that's happening on the federal level today, I can't keep up. So I really do need to go and look that up. I apologize, Sierra, but it is one of those where I can't keep up with anything that's happening on the federal level because it changes every 5 minutes. And so there has been talk about it coming back on to your credit reports. Okay, one thing I want you all to do, one more forced fun activity in the chat. In the chat, please, everyone do this for me. Tell me something new that you've learned or something that you want to do as a result of the credit presentation today. It can be anything, something new you learned or something you want to do as a result of the credit and today. As a result of our presentation. Oh, hopefully you can, and if not, just use AI and make up something. Oh, Asia, freeze it. I highly recommend it. I highly recommend it. I sleep much better knowing that my credit's frozen. Free credit report site. Yes, 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 yes. It's awesome. It's awesome, awesome, awesome. Other folks, what do you want to do or what did you learn as a result of our credit lesson today? Oh, didn't know you could freeze credit. Yeah, credit repair is not valid. You're exactly right. And credit repair hurts folks because when you're in a vulnerable situation, you'll do anything to get out of that situation. How to raise your credit score, how to pull your free, yeah, pulling the free credit report. That's awesome, y'all. Very, 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 very good. I had never heard of that tomorrow-ish. Brooke, what is that
Oh,
in?
the tomorrowish's comment about the credit repair not being valid. I
Oh,
never heard of what credit repair. I didn't know that was even a thing.
oh yeah, yeah.
That's
Drive on
really
over on Broadway. It's everywhere.
that's rough, especially like you said for vulnerable people who don't know. I would
Yeah.
not know
Yeah.
anything.
Another way to take money. Exactly. It is another way to prey on folks who are desperate. Yep. 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 Yep.
Yeah, many of the people in that predicament could easily take that money they'd give to a credit repair person and probably get something out of collections, talk to someone, and
Yep.
get
You're
it.
exactly right. And I do. Oh, let me make this caveat so I don't get killed. Consumer credit counseling and some of those places, those are legit, right? There are some legit debt organizations that really do help consumers. I'm talking about I'm going to throw a sign up on the side of the road and you call my number, or
Yeah.
I'm going to open up a little pop up here in a strip mall. Those are not legit. There are some very good organizations that do good work. What do you recommend for clients that are attempting to repair their credit quickly? You can't do it quickly. That is the reality of it, folks. You just can't because it takes time. Part of the reason is 35% is did you pay your bills on time every time? And it takes time to demonstrate that. What I will say is if you have clients that have that non-traditional credit, that service credit, that they paid their electric bill on time every time they paid their Verizon bill, have them talk to their lender about that and say, hey, how can I use this as a way to show that I've been really good with this particular kind of credit? But sadly, repairing your credit is something that takes time. It is a marathon.
I was gonna also add for something to tell clients that are trying to repair their credit that if maybe they have a family member or a friend who does have good credit who's willing to put their name on their credit card, that'll definitely help increase their score.
Yeah. It's if you're ever asked to do that too, think about it because that means you're responsible for the debt. So yeah, Chase
Yeah.
is right. It's good. And
Typically,
then
if you're the person with the credit card, you want to be very cautious and most of the time probably say no, unfortunately. But
yeah,
for those on the other end, it's definitely worth asking people in their sphere if maybe they'd be willing to do that for them because that really can help.
Hmm.
Well,
Carl.
something else that reminds me of is that I know a lot of times, unfortunately, people may take out credit in their children's names, right?
Hmm.
And I know like a lot of our organizations may be working with young moms who may already have their credit wrecked before they even get started. Do you have any words of wisdom or ways to get around that?
Kira just
Oh,
added something to the chat, kind of in that same
yeah,
framework.
yeah. Um, and- ooh, that's tough. That is really tough. And we have heard from people whose parents have done that, who's used their child's identity um, to take out credit. Um, unfortunately, it, unfortunately, to remedy that would mean that would mean ruining the parent relationship, you know, because that is a crime. And to get it taken care of, you're going to have to turn that person in and start the proceedings. Um, so it's awful because you lose a relationship with a parent and you also have bad credit at the same time. I hate that that happens, and we've seen it before. Someone said, "Dude, is no credit worse than bad credit?" I'll take no credit any day over bad credit. I can start building from a nice foundation of nothing than trying to tear down what I've done wrong and rebuild it again. So I would take no credit. For young people that do not have credit yet and are 18 going into the real world, what's the best way to help them build credit? The best way to help them build credit, I would say, is that non-traditional forms of credit. You know, put the cell phone in their name and make them pay the bill. The other thing that you can do is you can do a secured loan through your bank or credit union where, like, let's say I have $500 in a account and they lend me $300 and I agree to pay it back, over a certain period of time. What I'm doing there is demonstrating the history, that I can pay on time every time, and I've got something there to pay it off if worse comes to worse. But again, it starts out slow. I'll take no credit any day. I'll take it any day. It may mean you're going to pay a little bit higher interest rate at the beginning, but boy, it's better than trying to repair it on the backside. Yeah, no credit. Yeah. All right. Any other questions? Have I missed everything? Have I missed anything?
I think so. I think that's
I
Oh,
it.
believe we're all good, but if anything comes up, we also know where to find you, Dr. Sneed, and so y'all are
absolutely.
always welcome
Absolutely.
to email our help desk, and we can get that question to him. And yes, Sierra, I will. Chase actually may have already put this on the webpage for y'all. Yep, okay, it's on there.
Awesome.
So y'all can have that. And
Awesome.
thank
And
you
Chase,
again, Dr. Sneed.
I think I took all my notes off the PowerPoint, so there shouldn't be any
I'll
note.
double check that just to make sure.
Yeah, make
I didn't
sure
think of
because
that.
it
Thank
won't
you.
make sense to anybody but me. So yeah, take it off if there's notes there.
All
You all,
right.
thank you so much. It's been great being with you, and thank you for the great work that you do for Tennessee families. I appreciate it and really appreciate what you're doing across the state.